If financial words confuse you, good news. In the next few minutes you'll learn 25 terms you'll actually use, from budgeting to investing, in plain English. We'll cover money basics, investing foundations, and 5 beginner-friendly investing extras. Chapter 1, Money Basics. Assets are cash, property, investments, anything that can be converted to money. Liabilities are loans, credit card balances, or bills due. Example of equity: home value minus mortgage equals home equity. Net worth is a snapshot of your overall financial position. Savings are liquid, a house isn't. Cash flow: track it monthly to see if you're positive or negative. Budgeting: assign every dollar to a job. Saving, bills, investing. Aim for 3 to 6 months of living costs in easy access savings for your emergency fund. Credit score: higher score can mean lower interest rates. Inflation: your money buys less later, invest to stay ahead. Chapter 2, Investing Foundations. Compound interest: reinvest earnings so growth builds on itself. Return on investment: if you invest 100 and it becomes 110, your ROI is 10%. Diversification: mix different assets to reduce risk. Asset allocation: how you divide your money among different types of investments, like stocks, bonds, cash, or real estate, based on your goals and risk comfort. Risk tolerance: match investments to your comfort and timeline. If it sells for less, that's a capital loss. Bull market: often linked to strong economies. Bear market: normal part of market cycles. Passive income. Examples: dividends, interest, rental income, royalties. A dividend is a portion of a company's profits paid to its shareholders, usually in cash or additional shares. Companies share dividends to reward investors for owning their stock. Chapter 3, Investing Extras. When you buy a stock, you become a shareholder, you own a small part of that company. The value of your stock can go up or down based on how the company performs and how the market reacts. Bonds. Issued by governments or companies, usually steadier than stocks. An ETF is a basket of investments, like stocks, bonds, or commodities, that you can buy or sell on the stock market, just like a single stock. Index fund. Simple way to own many stocks at once. Unit trust. Invests in many securities, you buy units or shares. First, know your numbers, cash flow, budget, and safety cushion. Then consider broad funds like index funds or ETFs, matched to your risk tolerance and timeline. If this helped, like and subscribe. Comment which term you want a deeper video on next.